Hi, I'm Len, your trustworthy accountant. Today, I want to talk about a key term, AUSTRAC. Previously, people always thought anti-money laundering was the responsibility of banks and police. But now the rules of game have changed. Australia is pushing hard for Track 2. The regulatory focus is shifting from banks to gatekeepers like accountants, lawyers, and real estate agents. When handling your business, a series of mandatory action must be completed on the AUSTRAC online government system. Step 1. Customer due diligence, CDD. We can't just take a copy of your driver's license and call it a day. The system requires us to verify the business' ultimate beneficial owner. Step 2. Risk assessment and system scoring. We need to enter the source of your funds and the nature of your business into the system. If your funds involve high-risk countries or the transaction structure is unusually complex, the system will automatically label you as high risk. Step 3. Mandatory suspicious transaction report. This is the most stringent step. If we discover discrepancy in funds while processing your accounts for property transfer, or if you refuse to provide a source of funds, the law requires us to submit an SMR to AUSTRAC within 3 business days, or 24 hours for case involving terrorist financing. And the most extreme parts, tipping offense. In other words, if we report to you about the suspicious transaction, the law strictly prohibits us from telling you that we reported you. Otherwise, ourselves may engage you with a jail. Therefore, AUSTRAC doesn't rely on manual audits, but on a powerful data intelligence system. Even for a transfer of the few $1,000s, if it doesn't fit your business profile, the business is obligated to report it without notifying yourself. What should a business owner pay attention to now? First, after 1st of July of this year, the regulation will be fully implemented. From now on, if you are buying a house, doing asset planning, or making large transfer, please be sure to prepare hard evidence in advance. For example, salary and dividends. Prepare tax returns and pay slips. Second, overseas assets. Provide a complete purchase and sale contracts, tax payment certificate, and consistent bank statements. Last, parental gifts. A formal gift letter and proof of the parent's source of funds are required as well. To remember, compliance is no longer an elective but a required course. Planning ahead is essential to ensure the safety of your assets. As a FABC, we are experts in QBCC compliance and advanced tax planning. We help you move forward with clarity and confidence. Remember to click like, save, and follow.